this time of uncertainty from everyone, including us as the professionals. So when clients are talking to us and asking us what's going on, the reality is no one really knows right now. We're all kind of sitting and waiting.
Yeah.
With that, we've continued to be busy. We had a busy end of the year last year and a busy start to the year. And that's kind of led us to at least have a few projects to work on during this time, even launching some new stuff as well.
Nice.
So it's kind of, we're getting a sense of where things are while we launch that and get a sense of what the appetite is out there.
Yeah.
But it has totally altered our approach. It's totally altered business development or lack thereof, right?
Yeah.
And that's really my world too, is on the business development side. So things are completely altered, turned on their head, and nobody really knows when that's going to end. I think the best thing we can kind of do is continue to just move forward with what we can and try and be as resourceful as we can for clients and for people within the industry.
Yeah, for sure. On the business development side, are you guys putting a hold on that? Like, I know a lot of the shops downtown have stopped kind of prospecting activity.
Yeah. I mean, so give you a bit of background, our team, we focus on investment sales, mid-market office assets throughout the city.
Yeah.
My kind of general role is really on the business development side of things.
Yeah.
I wouldn't say we've halted business development. I think we've halted how we used to do business development.
Yeah.
We're not cold calling. We're not blindly reaching out to potential vendors, trying to get a sense of where they might be in the disposition process.
Yeah.
But we're staying in touch with people that we've continued conversations with. We're making calls and emails on our new listings to try and get a sense of who are the buyers out there. So I think it's changed. It hasn't solely stopped. What has stopped is how we used to go about things.
Right. Yeah, for sure. That might be for the better. Like, I think that ultimately, if we end up focusing on strengthening existing relationships and doing the best we can with what we have, it could probably, I think that, a lot of people have been anticipating like a weeding out of the week of a lot of, people in the brokerage space, especially in the housing side. Maybe it's ultimately the exogenous factor that's going to cause things to correct a little bit. I guess we'll see, right? Time will tell.
Time will tell on all of that. I wouldn't be shocked if that's the case. Like, that seems to make sense. I don't know. But yeah, like going back to your point, I think that's the only way we can go about things. Like, you're not going to go out and business develop, as you used to in these times, right? People are concerned. People are worried. Although that seems to have somewhat subsided a little bit recently. But, let's have just some human conversations. Let's talk about what we are hearing, what we know, what we don't know. And, hopefully we can just continue to get the information that will help them. Maybe it's 3 months, maybe it's 6, 12 months down the road, right?
Yeah, for sure, man. For sure. Okay. So basically the reason that I started the podcast, I've been running a sort of more formal podcast in the past, really trying to explore in depth real estate issues. But I figured since COVID's here, it was an opportunity to kind of ramp up that content because I'm sitting at home, and video chats seem to be kind of one of the running jokes of COVID. And so I've created this video chat series where I'm just basically trying to reach out to as many people as I can from the real estate industry, especially, just to get as many perspectives as possible and kind of aggregate that information so I can present it to clients, to people in the industry, and share that info. So, because I think that the big theme seems to be that, we're all in this together. We got to work together on fixing this problem or solving this new set of challenges and making our way through it. And the easiest way to do that, at least from my perspective, is with a full set of information. And I mean, you and I are in the brokerage space. We're both, in the information gathering and sharing business. Everybody's entitled to their own investment thesis, but the more info we can give them to support or deny that is the best, right? So
Yeah,
I guess the best place to start would be if you could just give me a brief introduction of yourself, and then kind of what a work week would have looked like for you at the beginning of the year versus how much that's changed now. And then we can kind of go from there.
for sure. For sure. Well, thanks for having me. Honestly, you put out fantastic content
I
always,
appreciate that,
whether it's Instagram, LinkedIn, you do some great stuff. So keep it up.
Thank
I think
you.
this is a great forum for this. Just getting as much information as we can. So fantastic. Glad to be on it. For those that don't know, my name is Michael Carew. I work at Colliers on the brokerage side of the business. I've been at Colliers now for 5 years, or 5.5, going on 6. I actually spent some time on the landlord side of things prior to that, and know Dan from our days of Guelph Real Estate. Since joining Colliers, I've kind of transitioned my business even. I have gotten away from where I started in the office leasing world up in the north end of the city, and now solely focus my time on investment sales of mid-market office assets throughout Toronto. And I work on a team with a few other brokers in the office as well.
Nice. Okay.
So things, jumping into your first question there,
Yeah.
how have things changed? Complete 180, right?
Yeah.
The days used to start of getting into the office early and kind of hitting the phones and managing the accounts that we're working on. But really for me, my main focus was always business development. So, cold calls, door knocking, the list goes on. That has completely changed and completely been altered. So, gone are the days of making, 20, 50 dials or whatever it may be, trying to dig up new business and new opportunities. One, I don't think there's a market for that. And right now people are just not having those types of conversations.
For sure.
And it's now kind of turned into just a passive approach of staying in touch with clients, existing or groups that we've just been speaking with over the last few years. Other than not getting into the office and actually putting on a suit and tie and now sitting at home in sweatpants.
Yeah.
It's really the main thing is just the business has slowed down.
Yeah.
For us, it's just ground to a halt. There's still stuff to be done, as I mentioned to you, and I'm sure you saw, launching new listings and stuff. We've done it. We're altering how we do that. It's not necessarily a full MLS thing. So there's work to be done, but it's just slowed, and everything now has to be kind of take a step back. Okay, how are we going to approach this as a team? And how are we going to launch this to the market? How are we going to reach out to clients, et cetera, right? Everything now just has to be looked through this new lens of dealing with COVID first.
Yeah. Does it seem like that's like a result of just, being, I guess, sensitive to like reading the room a little bit and, not trying to look like an ambulance chaser, let's say? Like, I guess that's a part of it, but also, I guess it's also, it's like, you can't sell property during Christmas because you can't compete with Santa Claus. And now, you've got this new attention factor that's really drawing on people. And how do you get in front of that? Like clients still need to be represented, right? People still got to move property, and how do we do that properly in this market? How do you adapt to those changes? Like I've noticed you're killing it on social media, like especially on the LinkedIn stuff. I feel like your feed's just full. My feed's just like full of properties of yours. So like, I guess you're doing something right there. Or the algorithm knows that I like you. But, I'm curious, like, has that whole side of things played a little bit of a bigger role? Because it seems like now the old boys are starting to realize that we might have been right about these computers for the past 10 years.
I think for sure. The technology has definitely made things easier in recent days. Just even if I go onto my LinkedIn and I look at my posts from 3 months ago to now,
Yeah,
it's about double the
yeah,
amount of traffic that
for
I'm
sure.
seeing on it,
Yeah,
which is crazy.
yeah,
Um, you know, we're not, I think as a team, and I'm sure you feel this as well, I don't think any of us are trying to cold call as we used to, where we do come across as those ambulance chasers.
yeah.
We don't want that. I
No,
think we're in the business of making real human connections.
yeah,
Um, and a lot of that is just having conversations about what's going on, what people are experiencing, and trying to get information, like you said, and provide that to them. So absolutely, we're trying to steer away from that consciously.
yeah,
I just, I think it's poor taste right now,
yeah,
to be honest.
yeah,
And then, yeah, going into the technology route, uh, we did just launch a property where normally we would have, been knocking on doors, handing out flyers. It would have been on MLS. It would have been a bid date likely. All of that has had to be now, okay, how are we going to go about this? How are we going to change that? And it's been a much quieter, softer approach to things
right.
across the board, whether we're calling buyers, or making the posts on LinkedIn. It's kind of one-off, slower, quieter approach to it versus blasted out to everything. Because I think, and this is our opinion, um, people are still trying to figure out where this is and how it's going to affect things. And so we're, kind of dipping our toe in the water here to get a sense of where the market is, what are the feelings,
Yeah,
and how we can get back to business. Because you're right, people do need to be represented. People do need to sell their buildings in some cases. Others have the luxury of waiting and seeing where this all goes. But it definitely has kind of, I think, allowed us to take a step back and just approach things a little bit more diligently.
right. Yeah. No, it's true. I think that might be, we were discussing this before, it could be a correction perhaps for the better, right? Where if the volume tightens, I mean, then, people are going to start being more selective about who they market with. And I think that it demands a much greater quality of service and much stronger relationships. I mean, I'm still pretty ruthless on my cold calling program, but I'm very, maybe that's the wrong word, but I'm very transactional about the way that I call, right? So I have a handful of buyers who have very specific mandates, and
Mhm.
I get the laser out and I go pick. I'm shopping in municipalities where these guys don't get calls from realtors all the time,
Right.
looking for property. So when I can say, look, I have a buyer who wants to buy your property and the 3 neighboring properties, can we put together a deal? The first question is sure, like, yeah, put it on paper and let's get, like, really a lot of these people are just happy to hear that kind of
Mm-hmm.
activity.
Mm-hmm.
But then the next piece is, and this is what led me to kind of start this whole program, the video chats, was what the hell is going on? And now I'm getting calls back from people who weren't returning my calls a year ago because like,
Yeah.
does your buyer still exist? Like, are people still out looking for? And so I'm having over and over, even if it's a new relationship for me, it still ends up the direction that you're describing, which is, people want to know, they want to hear from an expert what kind of information is going on
Yeah.
in the market and what everybody's thinking. Like, nobody has a clue, like you said at the beginning, right? Like, there's no precedent for this historically.
Yeah.
Spanish flu maybe, but the economy was what, like a one thousandth
Little
of the
different.
size. Yeah,
Yeah.
yeah. So
No, it's interesting you say that. I've had a number of groups get back to me, whether there's emails or voicemails that I've left during this time,
yeah,
who previously hadn't been, great at responding. And I think you're right in that people are wanting to just have conversations and get a sense of what's going on, which I think is fantastic. People do have more time on their hands, I've found.
yeah,
Um, but yeah, the gone for me are the days of just sitting at the phone and dialing. It's a lot more, I think you're right, like a targeted approach,
yeah,
and just a more human approach.
yeah, for sure.
Otherwise, I think you're going to get some backlash, and I just don't think it's serving anyone,
Yeah.
if not, right?
For sure. Yeah, I guess it really just comes down to, like you said, like the relationships, and I guess just trying to create value for people. Like I've always maintained that I don't pick up the phone and call somebody if I don't have any value to offer
Right.
them. And so that's, be it an offer or, be it, if it's a developer, be it a property that I think that they're interested in. So I think that, I'm just doubling down on that really.
Yeah. And I think you made a great point too about, you're in these markets where people aren't getting hounded.
Yeah.
I when I was speaking to people 3 months ago, it's the same old, right? You're being told that you're the fifth call this week.
Yeah.
Now you like to think that you have a unique approach or vision as to why that might be different and why your call, why you have some value. But you are their fifth call that week, right? So I agree, that's got to be different for sure.
Yeah. Expanding on that, like what are the changes that you're seeing on a larger scale? Like, and it could be as nuanced as like, the evaluation, the underwriting that purchasers are using, or, but on a macro level, like how does the industry seem to be changing? I know the general sentiment seems to be that it's kind of too early to tell because, and stimulus, I mean, the new round of stimulus today is going to be great on the retail rent support side.
Yep.
So I think that could prop things up a little bit longer, which is great. And I think that, the long-term implications of that are going to be awesome. But what like general sentiment, what does it seem to be like?
Well, you hit it on the head with a hammer, I think, in that it is too early to tell. That's the reality. However, we're having conversations daily with both vendors and buyers. And there's been a few kind of, I'll say, overlying themes that have come up in my conversations. One being, there's still a lot of groups out there looking to buy.
Yeah.
There's a lot of equity out there. And as we all know, the last year, or however long they've been looking for property, there's been very little supply to match that.
Yeah.
We were getting bidding wars on really property that wasn't that great, driving values well beyond what I thought were justifiable values, market values.
Right.
So I think there's still a lot of those groups out there looking for good property. Now, they've sort of tightened their parameters is
Right.
the other part of that I'm hearing. I think groups are trying to be a little more strict and stringent on what they're going after. Obviously, right? There's a lot of uncertainty there. There's a lot of doubt on where we'll be in 1 month, 3 months, 6, 12, 18, whatever it is.
Yeah.
And the conversations I'm having with people is they're just being a little more stringent on what they're going after and how they're going after it. Maybe in their valuations, maybe looking more at just their core assets and what they feel are safer bet for them.
Yeah.
Not looking to be as aggressive and maybe take that little bit more risk on some of these properties, whereas 6 months ago they might have.
Yeah.
So my position and our feeling is that a lot of these, good, solid product, I think is still going to have buyers. And we've been happily, I'll say, surprised or happily, with the feedback that's come from some of these listings that we've just put out there. Where does that lead to from a transaction and value standpoint? We don't know yet.
Yeah.
We don't know.
Yeah, I think sorry, go ahead.
No, that was,
yeah.
Go for it. Yeah.
All right, man. These Zoom chats are always fun. It's always tough. You realize how important body language is in learning when it's your turn to talk.
Totally.
It seems like to me, like, I think that people anticipating massive cap rate suppression seems to have disappeared a little bit. I think the speculative value increase and the commoditization of real estate seems to have been forgotten about a little bit for the short term. And what that translates to, and Robbie and I had this conversation the other day, was, really a return to fundamentals, right? And if there's ever a better time to, really make sure that your asset's performing to the best of its ability, it's during realistically an economic reset like this. Even if we don't see a correction, there's really no disputing that we're completely resetting our behavior.
Yeah.
And so I think that seems to be a big theme. Do you think that, like, and this is a really tough one, nobody's really liked answering this question, but do you think that we're due to see things change more from where they have? Or like, I would have answered this question as a yes, even just a week ago, but it seems like the market found its bottom pretty quickly, at least in the areas that I'm transacting. I do like a lot of resale research in New York region.
Mm-hmm.
And volumes already rebounded from last week and 2 weeks ago. So like
Interesting.
the bids. So I use like your sale to list price ratio as sort of a bid ask
Is
table.
this on the res side of things mainly that you're talking
Yeah,
here?
I would use I just use res data because it's
Yeah,
the easiest to put together. But I think
absolutely.
that you can kind of apply those conclusions to a lot of the it's at least with like your suburban infill stuff. Most of that stuff is res, right? Like it's it's 3 residential properties that you're going to tear down and build a townhouse site or a building. Do you think that we're due to see more change, and perhaps even you could tie in that policy element that just came out today? But do you think that policy is adequately performing in its ability to kind of prop things up?
Yeah. So, a couple things here. So, going back to like these kind of themes and what people are saying and such. I think when we're going back to fundamentals and looking at things, people are going to be a lot less speculative. Even if it's vacant buildings, even if it's, potential rents that they can achieve, groups are just going to be a little less, bullish on what those arguments are. So I think when we go back to the fundamentals, I think there's going to be a lot of digging into tenant base of properties if they're multi-tenanted or if there's income in place on the commercial side especially. And they're going to be a little more stringent in looking at who the individual groups are and where that income is coming from.
Yeah.
Because, 6 months ago, 3 months ago even, it didn't really matter. Everyone was kind of fine and well off. Nobody was really too concerned about, for the most part in these markets, tenants defaulting, where it would completely disrupt the valuation of the buildings. I think we're going to see groups just tightening the reins on that a bit and looking at that further as well. Is there going to be more correction or more change? I have to imagine so, at least slightly. I don't think that it's going to be some big crazy drop in value. Don't want to suggest that. Again, I don't have a crystal ball, but I don't think that that's going to be the case. I think there's still so much equity out there and so many strong buyers looking for product that will be okay in achieving, the value that's needed, or the transactions that are needed. Does it change the landscape and how those go about? Absolutely. Like, I don't think, at least for the near term, we're going to have tons of, multiple bid scenarios where we got, 10 groups and we're driving values up way beyond what we feel is actually market. I think those are for sure going to go away for the next little bit. I'm bullish in thinking that we'll be back to that once the dust settles and everyone gets a just comfort level on where things are going to end up. And then you make a good point there about, pulling this data that you're looking at, because in the res world, it's a lot easier to pull that data and get it. You're, like you just said, you're looking at it on a weekly basis. Yeah. I was pulling together some data before in the area that we look at, which is again mid-market office assets in Toronto. Weekly data just isn't there. We're talking about things where there's 40 to 60 transactions a year. Yeah. It's hard to break that down even to monthly. We're really looking at quarters and stuff. Yeah. So it's hard to pull that and suggest, oh, you know what, that's what we're going to see on the office sales side of things. But I can tell you it's down already. Transactions are down. There's going to be more change. Yeah. But at the same time, does that maybe ramp things back up when we come out of this?
Yeah. Yeah, it's interesting. Like I've a lot of people are talking about the pent up demand too, right? And I guess the question then also becomes, is there pent up supply potential? But the interesting piece that I think a lot of people discount when they're trying to analyze real estate is that the transaction timeline or the sales cycle of real estate is such a long run process that you can't really forecast it on the same way that you would use regular economic metrics, right? Like the people who are
There's
buying.
definitely a delay. Yeah.
Right. Yeah. So there's a lag in that data, right? So like the people who
Mhm.
are buying today are closing, let's say in within the 3 to 6 month time horizon, let's say.
Yeah.
And then that's when those things. So like even the information that we're processing today isn't really going to become apparent in the data of the market for another quarter at least. And then,
Agree. Yeah.
so you assume, okay, like if I were, asked that question, like the way I'm thinking about it is, yeah, take the information today and assume that's where the bottom is in 3 months. But then assume, okay, opportunism is entering when things start to look bad. And then another 3 months is before you start to see the recovery. So it could appear bad, but it might not actually be. Like I've already seen a crazy amount of opportunism, like from what you're describing, of people who are thinking, okay, this might be my last chance to get in. If I want a core asset or if I want some downtown exposure, this might be my last chance while I'm seeing the fire sale on, some of these really stupid purchases, or like guys who just like, and so capitalizing on that, I guess the overexposure that a lot of groups had in the market. And I don't know, are you seeing opportunism generally?
There's totally a delay, right? There's absolutely a delay. So, you're seeing transactions still close, which is nice to see, but those are transactions from 3 to 6 months ago, right?
Yeah.
So we do have to kind of take that with a grain of salt, but knowing that, not much has gone on already the last few months, we're starting to already see the dip in transactions. That's going to continue forward. With respect to opportunism, I think there's a lot of groups out there who, especially on the private side of things, who are, will come up and think that it's a fire sale and think that it's time to really, lowball and say, well, here's my opportunity to get a 20% discount on what it was 3 months ago.
Yeah.
I don't see the vendor side of that yet.
Yeah.
I think it's going to be some time before there are any receivership sales and stuff like that. Like there's a delay in all those types of things, right? Because tenants will have to default, mortgages will have to go bad. Like there's a delay in that.
I think the credit scenario alludes to that being like that's a very unlikely scenario as well. Like even I don't think we're going to see, like I think a lot of guys are like, oh yeah, like half the market's going to be on power sale, like
I don't think so.
Like the banks are like, we have an oligopolistic banking market. The reality is that our entire economy depends on this. And the last thing, like right now, I mean, I think that early on in this, the government had actually just relieved a little bit the liquidity constraints that banks had, so that they were able to lend out more money. And basically, they had, and a lot of these bond repurchase, like it's of a similar design, right? To keep cash and liquidity flowing from the banks, because that's the channel for which they can impact the market. And if a bank takes back a property, they have to adjust their cash ratios to account for that value, right? So there's really, like, it's too much systemic risk. Like on the B side, I could see a little bit, but like a lot of these good core assets, like none of these guys are on the B side really. And if they are, like that means that there was some reason that the bank didn't like them, and therefore and that's probably because either they're fishing outside of their bracket, right? Or the asset was bad to begin with, right?
Yeah. I think there's obviously there's going to be some low hanging fruit there that, yes, this does happen too. But talking broadly for the market, it's frustrating when you have those groups coming in thinking that it's, huge discounts because of the situation that we're in. And, that's really not the position necessarily of the vendors. Because, it's kind of a self-serving, idea, right? They're in it because they think they're going to be getting a nice juicy discount.
Yeah.
And I don't think one, we're not there yet. If that even were to happen, that's going to play out. There's going to be a delay, and we'll see that play out. But I don't see it happening. Is there a slight correction? Yeah, maybe, but nothing like that dramatic, right?
No, I agree. I think
Maybe that's my bullish attitude and my optimism, maybe, but
no, I think I don't know. I think that's that's a realistic scenario, right? Like it obviously serves us well. Like I guess that there's obviously an ulterior motive for a broker to say that everything's going to be fine because, we want things to be fine.
Yeah,
but
for
you
sure.
and I are the kind of guys like we can sell bad properties too, right? And I think that the alarmism and the the apocalyptic mentality that a lot of people have is, I think it's proving to be a little bit like, I think our credit scenario is bad in Canada. I won't dispute that. And household credit apparently hasn't really tightened, at least on the A side, that much. Like, if you still got a job, you can still buy a house, right? I do think that I think that there's room for correction, but that's really just a result of that's the aggregate of a bunch of people overpaying for properties. And then that stuff's getting, realistically, again, we've seen a huge value growth in the market since the beginning of this year. And could we see that wiped out? Yeah, that's probably a healthy thing. And if you thought that it was smart to bid up properties and overpay by 10 or 20% based on, or buying things at a cap rate that just makes absolutely no sense based on the most recent comp, then you were taking that risk to begin with. And if you didn't understand that, then that's really your own problem, honestly.
Yeah. And what's their outlook? So I was just actually pulling up our own report that we put together. The average cap rate for the stuff that we look at was 3.8% in Toronto last year.
Right. That's on office specifically, or just mixed?
Yeah. Office, mid-market, office, both investment and kind of end user sales. So, that's the value has continued to be pushed on that. Now, a lot of those groups that are buying that, a lot of them are users, but a lot of them are just long-term looking to hold this thing. They're not too concerned, or they're not overpaying, by such dramatic amounts that they think in 2 years it could be an issue if there's a slight correction, right? Their horizon might be 20 years or something.
Sure.
So I don't see that happening as much on the, on that commercial side, because I think people were a little more, making, proper economic decisions to some extent when they were buying it anyways.
Yeah.
I've heard some crazy stories from some friends in the res side where they were getting 40 offers on bid night. And so it's a little different than that because you didn't see that much demand, but there was still healthy enough to drive pricing and such.
Yeah. It spills over. I would say eventually, I think, again, it's a function of that longer run process in the commercial space. Even if you were seeing that massive supply scarcity and growth in value early this year on the res side, it still takes a little bit for the commercial market to catch up to that sentiment, if it does at all. And so I think there's a little bit of protection, at least in the core. I would say there's a lot of mixed use stuff up in the suburbs that has the potential to get smoked, especially if a lot of these guys are going to be if your tenant's, a retailer who was just scraping by anyway.
Right.
And then, I think there's some room for things to give a little bit. But I would agree. I think that our financial system doesn't want to create this problem, and I think they're going to do everything they can to avoid it. And it seems like the policy environment now, I apologize, I'm getting distracted by my dog a little bit, but I'm trying to make sure he's not all my cables, the work from home woes. But yeah, I just think that, again, I think a lot of this risk was built in. People should have acknowledged it when they were getting into it. And I think we're going to realize, I think a lot of those risks are going to manifest themselves. But I don't think I don't know if that's systemic. Sorry, go ahead.
I'm kind of curious, actually, just because, the whole industry, the whole economy is basically put a pause button on for the last quarter. Mainly. I'm curious and talking with some of my colleagues and stuff, if there's going to be this flood of new listings that's going to come out when everybody thinks, oh, today's the day, we're getting back to normal, everybody's, worry is gone. is there going to be a flood of these listings that we're getting ready to sign up, potentially being signed up throughout this period? And then, the first one's going to happen, and then all of them are going to go to market. Be curious to see if that is the case at all.
I feel like you might be like, I think that anecdotally, you and I are uniquely in touch with whether or not that actually has the potential to happen. And I think it really only does in an extremely distressed scenario. Like if the economy looks really bad, if GDP is falling, which they're anticipating is going to happen, if employment is really difficult to recover, yep. And if we're starting to see rolling vacancies like crazy in the city, and people are in a hurry to exit because they're worried things are going to fall more, that's the scenario in which that could happen. But think about like when you're advising a client, and I'll use this to segue into the next question too. When you're advising a client, if there's a competing listing that's just gone up, you might say, look, let that bid date happen. Let's let this pass us by and see what it transacts for, and kind of use that as guidance on where we're going to price. And I know that these are assets that aren't as comparable as like on the residential side, especially. But I mean, in most cases, the worst thing that you can have is a competitor, because it chokes out your demand and it creates shopping, right? And then people are like, oh, well, I'm just going to go negotiate with the other guy until I'm unsatisfied, and then I'll come back, right?
And I don't think it'll get to that point. Like that would require so much supply to come out, right?
Yeah. And then we're not going to be advising people to put that supply in the market, right? Because you'll just say, look, like you're better off to wait and see right now, because I want to see what that one up the road transacts, and they're going to be taking a lot of your demand right now.
And I think that's a healthy message for, just blanketly is wait and see. Like
if you can afford to, for sure.
Yeah, if you can afford to, and you're fine to, and you're comfortable to, you don't need to be doing anything today. Right. And I think that's a unique message that I've heard now and continue to see. And I think it's going to be the way forward until, the dust settles and we get this sorted out.
Yeah, for sure. Yeah, I guess it's, unless you, like, I always say to people, I'm not a no guy. I'm a yes if guy. And so it's how do we create a scenario in which this transaction makes sense right now? And if we can check all these boxes, let's do it. If not, then let's wait, right? And then it's, and so I don't know. I mean, beyond the advice that you just given, is there any more, specific or broad advice that you're providing to people, other brokers in the space, colleagues, clients, whatever, friends, family, that you could, just give any insight onto, how the world that you're seeing through your lens indicates anything that might be of value to people?
So, again, I don't want to sound like or pretend that, I'm the guru and we've got it all figured out. Because
I thought you were the guru.
You're right. Like the crystal ball doesn't exist. No one truly knows. If they're saying that, they're wrong.
Trying to sell you something.
Yeah, exactly. Right. But the message that's continued to come up, and it's both for clients, but also, for colleagues, and it's been given to me as well, is simply what I just mentioned. It's the wait and see. I feel like we've kind of come out of the sheer panic of things. I feel like that was like a week and a half, 2 weeks ago. It seemed like I was panicked, quite frankly. Like I was worried, what is this going to look like? What's it going to be? That has seemed to, subside slightly, which is nice. But when the markets were falling off the cliff and people, there's, layoffs going on and people not realizing, really what the heck this virus really was going to be doing, I think there's a lot of panic, and we were all just kind of, uptight, being, what the heck is the next step? And I think then it was definitely wait and see. And I think we can continue to give that as advice, is just, let's wait and see. Again, I am an optimist at heart, but I think we're going to come out of this just fine. And I think it's all going to get sorted out, and it's going to be okay. And whether it's 6, 12 months, whatever it is,
Yeah, I
And
feel like sorry to interrupt you, but
no, no.
I feel like the horizon, like even if it's longer than that, you know, I think I put this in my most recent weekly market report, but like the one of the things that a lot of people discount for, and a lot of the bears don't really, and I would actually consider myself a bear up until maybe a week ago. Like I actually thought things were going to be a lot worse, but they seem to have
Mhm.
stabilized nicely. And again, like that really depends on financial markets a little bit. Like,
Yeah, totally.
so I think things could get worse on that side, but um, you're buying properties like this with a 5-year financing term minimum typically.
Hmm.
So, you know, there's only, I think, one time in recent history where you would have lost value after 5 years. And there is a potential scenario, especially for a lot of these people in the 2017 transactions, or like Q1 2017 transactions, where the value of their property hasn't recovered enough to substantiate the value, and the lender might not,
Hmm.
might choose not to renew.
Hmm.
But again, that exposure was very much in the residential side. So I guess what I'm trying to say is like where where you and I are thinking, okay, on the transaction side, your 3 to 6 months month closing is how long it takes for the market to realize that information. On the financing side, you're looking at an even longer cycle, and that I guess mitigates that exposure. Like if it takes us 3 years, 5 years to get back to where we are, if you bought a property yesterday, you're still okay
Yeah.
like your lender's not going to give you any hard times. You might not be taking any equity out of it, but you still get to hold the property. And the reality is, like you just said, these guys are buying them for 20-year horizons anyway,
And
right?
and the reality is that, it the last few dips that we've come back from, what is it? It's a few years, right? Like when we're
Yeah,
talking.
other than like 87 to like 95, 3,
Correct.
5, whatever. And I mean,
Correct.
that was ugly.
So if we're looking at it that way, I always go back to, like, we're a global city, top global city.
Yeah.
It's once all this gets sorted out, and again, we're realizing economic realizations due to a healthcare um, scare or a healthcare epidemic, but it wasn't the same where it was, underlying issues that we know of yet, that caused this. And so I am bullish and I am optimistic that I think if we just wait and see, sit tight, it's gonna pan out, and we'll come back from this. Hopefully it's really quick, as
Yeah.
quick as it happened in a perfect world.
Yeah.
But even if it is, like you said, a little bit longer, you're likely still okay, right? And so I think we're going to be just fine as a market moving forward in this space.
I would agree with that generally. I think that there are a few vulnerabilities and maybe to play the devil's advocate a bit here,
Mm-hmm.
I think that there's
Go for it.
a lot of domestic support. And that seems to be where a lot of like the recovery and volume has come from, at least where I'm seeing things. But one of my fears is exactly what you just said. We're a global city, and it's not, I don't think like Canada, I think will be okay. I think our credit scenario is a little bit ugly, but that's really more on the res side. Like I think a lot of these guys in the space that you're playing
Mm-hmm.
are safer.
Mm-hmm. For sure.
Some developers are levering up, but I mean, that's still different than, but the global city piece is like immigration is a huge part of why Toronto is so successful right now. And I think just travel restrictions alone
Mm-hmm.
could really minimize the impact of that for the short term. Like, if China gets a second wave, then it's going to take longer for us to open up travel there. Or, if we have a second wave, nobody's going to be flying in here. And then I think that the other play, these are like super exogenous factors that we can't really control for how other countries are behaving in how they're dealing with their
Mm-hmm.
COVID shit. So I guess the question becomes like, do you think that, I guess on your side, like on the commercial side especially, do you see as much risk with foreign capital, constraints as a long term, or not too fearful about it?
Well, yeah, well, firstly, like, yeah, I think how everything reopens is going to be such a weird dynamic, and it's going to be actually very interesting to see.
Yeah, I'm very curious.
um
Yeah, that takes shape too.
I'm crossing my fingers the golf courses, but
Yeah. Well,
it,
that's socially distant. At least the way I play golf, man.
I
I'm
over in the woods all
away
the
from everyone
time.
else. Yeah.
um but yeah, that'll be very interesting to see how that plays out. I'm curious how that will go. The foreign capital thing, yeah, it plays a huge role. Absolutely. It plays, without getting into it. It plays a big role in our marketplace. Obviously, what was it, a year and a half ago, 2 years ago, when they put some restrictions on Chinese money exiting.
Yeah.
Vancouver saw that
Yeah.
definitely hit. So again, we don't know, because the delay on that will be, it'll be some time before we see that. But I wouldn't be shocked if there is absolutely some effect of lack of foreign capital coming in. Absolutely.
For sure. Is there anything that we missed that you wanted to cover? Like any discussions that you felt, that would bring value to people?
Nothing too top of mind. More on, I'll say, selfishly for myself. I was listening to you and Rob go on about his dealings of, his situation, which didn't sound like much fun. But what are you seeing? Where are you seeing opportunities? I know you do a lot of, it looks like some mixed use kind of redev stuff, but you also have a big res side of things.
Yeah.
I'm curious to get your take, because I know a little while ago you were kind of even highlighting, like, here's where I think there's an opportunity in this neighborhood. But is there somewhere that you're really bullish on that you think is going to be interesting kind of going forward?
Yeah, for sure. I love having these discussions. So like I think that we will see distress in some of these inflated mixed use assets, like your infill, not like the stuff that will never have redevelopment potential, because you'd have to assemble, 500 feet of 15-foot frontages.
Right.
Like some stuff like that, like your high street stuff, ground floor retail, 3-4 residential units up top. I think that, a lot of those aren't those aren't big institutions getting national tenants, right?
Right.
And a lot, like what we've seen, I think Kevin Winter said 1 in 10 restaurants are already permanently exiting the space.
I saw that. Yeah.
And they anticipate that it could go up to like 1 in 5 by the time this is all said and done. And I mean, I think that the cracks are going to show on that. And I've been, like, Jamie and I have been talking about, getting a place in the city that's a little bit more, has at least a passive income component, so that we could, like, rather than living in a condo, because like we have a kid, right? So having a place down there, I'd run my office retail on the ground floor, and then maybe get the Avena guys to run their office above me, because we have such a symbiosis. And then, have 2 residential suites kind of thing. Something like that kind of thing I'm really bullish on, because I think it'll recover well. I think that once you start to see these rolling vacancies, you're going to get a lot of businesses that weren't viable before that are going to enter the space. And I think that that's great, because I think we do need to see some turnover. Like, a lot of the guys exiting the space, some of them, you're like, these guys were doing fine. They're just pissed off. Like, they're just like, they were just running their business because it was running itself anyway. And they're just like, and they were like, everything, the going's good, let's keep doing it. And then now the going's not good, and they're like, fuck this, I'm going home. Like, right. I don't want these headaches. Right. And so, and they probably, a lot of them are owner occupied. So they were like, screw it, I'm going to go retire. Like, I'm going back to Italy or whatever, and I'm just going to sit on the beach,
Right.
I think that's good opportunity. And I think the other piece is, the property that I transact the most, I would say, is like your secondary plan residential stuff. So infill, like if you can pick up 2-3 lots on a main road in York region, I think, a lot of, like, York region, well, anywhere in the GTA fringe stuff. I think that they were opportune because a lot of the owners are fed up with being on main roads. And I think that they're going to become more opportune because the general sentiment around, like, the whole urbanization and a lot of, like, the boomer stuff. I think that this could create a big shift in consumer sentiment for the older generation, who now are, like, literally have a health vulnerability for living in a more urban area. I don't think that could manifest in the way that some economists are saying, and such that, like, there's going to be a huge exodus of boomers leaving the cities and moving to Muskoka, which, like, it's just so unlikely. But I think that there could be some opportunity. So, like, if you're a guy in a condo who wants, like Rob as an example, in a condo who wants to buy a house in Toronto, I think there's going to be a good opportunity there for in the detached space. And I think condos are going to come down. I think, I think that it's more quantifiable with
Right.
condos, because you have prices today, you have all of the froth on top of it. So all these pre-sales that are, and some of them are being assigned even higher. So like that's erased already. Realistic, that's gone. Cause like even in a no growth scenario, those investors are screwed, at least until we start to see a recovery. And the best thing that they can hope for is that they start seeing closing delays on the projects. And I apologize, I'm really rambling on this, but
No, go ahead.
then below that, you start to see your bad assets, right? So people who bought negative 2% cap rate condos, right, where they're paying $800 fee so their tenant can like that's basically economic socialism, right? Like some foreign investor is giving you the privilege of they're losing money so you can live in this condo and live the life.
Yeah, that's going to be
that's gone. And then the Airbnbs would be the bad assets as well, and the ghost hotels. I think you've already seen some fire sales on that stuff.
For sure.
But a lot of them are fire sailing into the rental market, which is good. So rental suppression, I think you'll see, and then condos. I mean, if you evaluate condos on the fundamental of rentals, I think that you could see that too. I think that supply on the housing side will actually tighten. I think a lot of these developers are just going to say, screw it, we'll slow down. Our construction's slowing down organically anyway as a result of this thing. And we're just getting time's on everyone's side realistically. Like
that's a key one. I know you mentioned that with Rob. I think that was really interesting is time is on everyone's side.
Yeah.
Because then it'll be able to tell, well, where's all this going? So
let me ask you the same question. I know I want to be mindful of your time, but
no.
But like
where do I see
where do you see
opportunity if it were to come? I think in the space that we play, there's a lot of owner occupied buildings. Now generally on the smaller side of things, the owner users are able to pay a little bit of a premium because they can run their business out of there. So they're not just looking at it from a cap rate. I think that there's going to be a number of groups who maybe just are taking their time in looking at some of this stuff. And I think if you were to kind of go in there, even if it was a vacant building and look at it, I lease it out, do whatever needs to be done to it to get the income in place. I don't think you're going to lose in 2 years, a year and a half down the road. It might cause some pain early days as everyone gets back, and what do rental rates look like and where is all that going? But I think there's an opportunity to kind of get in now while there's just a few, fewer people at the table on some of these assets, and an opportunity to get some pretty cool assets in great nodes throughout the city, right?
Yeah, I would agree with that. I think I had the same sentiment just on the mixed use side, and that's
just And anything, I think there's a great demand. You're almost diversified in the building itself when it's these mixed use types of assets. I think there's great opportunity for that. Anywhere location driven, anywhere that there's a good location in the city, I think you're going to win. Now, 6 months ago, as every buyer in the world is saying, well, I want something with good location, with this value add, yada, yada. And it's like you're a dime a dozen. I think there's opportunity now to just get those deals done, and opportunity that in a year and a half, 2 years down the road, you're going to look back and say, oh man, I got these 5 new buildings that are, they're fantastic locations in the core, right. And it's going to pay off, but we'll see.
No, I would agree. I think again, it's like, how do you get enough exposure to the recovery, right? Nice, man. I guess on that note, we can wrap up. And I guess if people are looking for what you just described, or if they want to pick your brain on the office side of, the city and get a bit of an investment outlook or whatever, how do you prefer people reach out to you? Like, do you want them to add you on LinkedIn, send you an email, whatever?
Anything at all. This will obviously be up on LinkedIn, so connect with me there. Shoot me a message. I'll provide my contact details and happy to answer any questions, any calls that come in. as we mentioned, we all got a little bit more time on our hands. So happy to have those conversations
Yeah,
and
for sure.
those discussions. And you know what, provide as much information as we can to groups. So whether it's our reports, our newsletter stuff that our team's kind of putting together for this, we'd be happy to share and discuss for sure.
Okay, man.
Awesome.
Yeah, I really appreciate your time. I think the insight's going to be super valuable to a lot of people. So I really appreciate it. And
Awesome.
yeah.